Stocks on Wall Street rise with the S&P 500 and Nasdaq closing at record highs led by solid earnings and key economic data showing strength in the economy. The Labor Department reports a decrease in jobless claims for the week ending July 12th, while the US retail sales in June beat estimates. Asian markets trade with gains tracking Wall Street cues and easing core inflation in Japan. GIFT Nifty indicates a mildly positive start for our own Indian markets. Crude oil prices rise on the back of falling US stockpiles and after drone attacks on oil infrastructure in Iraq. Gold prices meanwhile fall, weighed by a stronger dollar and solid US economic data. Axis Bank disappoints in Q1. Asset quality deterioration weighs on profits. A tweak to provision policy shaves 620 crore rupees from the bottom line. Slippages rise 70% to more than 8,200 crore rupees due to the technical impact, while Wipro meets muted estimates. Revenue contracts 2% on a constant currency basis and margin also shrink but in line with expectations. In major earnings expected today, Reliance Industries is all set to report its June quarter numbers. The company is expected to report a 16% uptick in profitability and expansion in operating margin. Reliance Jio is anticipated to report modest sequential growth led by steady subscriber additions, while the retail segment will continue its growth momentum with robust revenue growth and operational improvement. Good morning in the Mumbai News Center. I am Vamakshi Doria and you're watching Power Breakfast. Today is the last trading session of the week and hopefully the bulls might see some green on the screen. At least modest gains is what the GIFT Nifty is indicating. But first up, let's take a look at what the Asian markets are doing. Well, the handover to begin with from Wall Street was very strong. S&P 500 and Nasdaq both closed at a record high, and that does reflect in the Asian markets. Take a look at Hang Seng. That index is up almost 1.29%. The Taiwan index is also up close to 1%. In fact, the Australian index managed to hit a record high in line with what we've seen across Asia. But what's not doing too well on the flip side is the Nikkei. It's down almost 0.2%. The Korean index, which is the Kospi, is also down almost 0.5% in today's trading session. So apart from these two indices, most of Asia is in the green. The GIFT Nifty will also come up for you on the screen and it will indicate how the Indian markets are expected to open. For now, it's a 12-point uptick, but let's see where we go from here. On the other hand, let's recap what happened. Well, that's all the global market action, but how will all of these overnight cues impact our own Indian markets? We have a research team joining in with us to tell us what the trade setup looks like and the stocks that are likely to be in the news. Let me first start off by talking about how our own Indian markets shaped up yesterday. It was a modest start in the green. Nifty closed at day's low, snapped a two-day gaining streak. The Nifty continues to, trade in a very consolidated range. If you look at how the range has shaped up over the last week, that table will come up for you on the screen. For now, it's ranging between 130 to 150 or 160 points. The bank and IT were the biggest laggard in yesterday's trading session. Tech Mahindra, IndusInd Bank, Infosys, Vipro were some of the top losers in today's trading session. The broader markets, though, they snapped their three-day gaining streak. Now, as far as the US markets are concerned, jobless claims for the week ending July declined by 7,000 from the previous week. Retail sales were up 0.6% from May as compared to the 0.2% consensus estimate. So the economic data that came in from the US markets was very, very strong, and resultantly the dollar index was at a 3.5-week high. The US 10-year Treasury yields cooled off marginally from 4.46% yesterday to 4.44%. And the US markets resultantly also saw a very good session in yesterday's day. As far as today's trading session is concerned, we'll be keeping an eye out on result reactions, especially from Axis Bank as well as Wipro. Apart from that, keep an eye out on LTI, Mindtree and Indian hotels. These other counters will also be reacting to their respective set of numbers. Earnings today, keep an eye out on big boy Reliance, JSW Steel and T Finance will be some other counters we'll be watching out for. As far as board meetings are concerned, take a look at Spandana Spurti. A board meeting is scheduled today to consider fund run. fundraising, and Motherson Sumi Wiring also, it happens to be the ex-date for bonus issue in the ratio 1:2. So that is how the trade setup looks like. But Mangalam is now joining in with cues from the F&O space. Mangalam, what are you picking up?
Good morning. So, if you look at the yesterday's move, it is more of consolidation towards the lower end of the trade in which the Nifty has been trading. So, we've been consolidating lower after having consolidated higher as well. Yesterday, the impact was led by two indices, Nifty Bank as well as the Nifty IT. Remember the previous few trading sessions, the IT index showed some signs of life, but thereafter we saw that index fall back once again. In the broader markets too, for most part of the day, the green line was above the red line. It was only towards the end where the mid-cap index as well, along with the frontline indices, when it declined, that the lines intersected and the red line ended marginally above the green line. We spoke about the Nifty Bank as well as the Nifty IT index, the two stocks I'll be watching out for, which impact both these indices. We have Vipro, weak results coming in, Axis Bank, weak results coming in as well. How much of that is in the price, or do we see some more fall, is something we'll watch out for. The FIs, they continue to sell in cash market. They sold about 3,700 crores yesterday. The DIs bought about 2,800 crores, so the net flows were 800 crores on the sell side, and they continue to sell lock, stock and barrel in index futures. Another day, 2,000 crore worth selling, 1,800 long contracts unwound, 8,000 short contracts added, and their net exposure now is over 1.3 lakh on the short side, with longs falling just to 17%. Remember, this number at the start of the series was close to 29%. The option writers are still hoping for the range to continue. That's why we've seen writing at the 25,200 call, the 25,300 call, both of them having a premium between 150 rupees, and at the lower levels, 25,200 put and 25,100 puts, both of them a premium between 100 to 150 rupees are in focus. What does this basically imply? That option writers aren't expecting the range to break. The range being support at 25,000 to 25,050, resistance coming in at 25,300 to 25,350. Remember, for Nifty, between 25,300 to 350 is the 20-day moving average, exactly at 25,325. And the Nifty Bank was interesting yesterday, broke below the 20-day moving average. Can it go ahead and reconquer that today or not is something we'll be watching out for. RBL Bank, the stock which exited F&O ban yesterday, has re-entered F&O ban, so watch out for that.
Well, thanks for that comprehensive roundup, Mangalam. But let's slip into a very short break. Up next, we get you a review of Wipro's and Axis Bank's Q1 numbers. Don't go anywhere, stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. Let's focus in on some earnings then. Axis Bank disappointed in the first quarter. Asset quality deteriorated, dragged profits lower. Gaurav is here with the fine print. Gaurav?
Well, as when it comes to Axis Bank, a weak set of numbers is what we have seen for first quarter, and I'll explain you why weak. When it comes to net interest margins, 17 basis point of fall is what we have seen in the first quarter. The street was expecting 10 to 12 basis point. Now, bank has broken up these the net interest margin fall. 4 basis point fall from the interest reversal and 30 basis point fall from the repricing. Other than that, another negative surprise was the credit cost. Now, it has inched up very much. When we talk about the normal business, it is at 1.1%, which is again higher than what the street was expecting. There was also one-off impact. There was a technical impact in this quarter worth 620 crore rupees, which has impacted PAT. When it comes to provision, the technical impact is worth 820 crore rupees. It has also impacted the gross slippages somewhere in the tune of 2,800 crore rupees, and as a result, the slippages have went up almost to 3.1%, and credit cost also went up to 1.4%. Even if we exclude this, again, credit cost is higher than what the street was expecting, and as a result, profitability has also declined almost by 4% on a year-on-year basis. Now, what is actually concerning for the street is that this one-off technical impact is coming up at a cost of the book, because ROAs have come down almost by 15 basis point, and ROEs also got impacted almost by 1.4% because of this technical impact. That is what the concern is. When we talk about management commentary, what they are saying is that the slippages will remain muted in the coming quarters, and at the same time they are also confident that because of the higher recoveries, the slippages will come down, and as a result credit cost will also come down. But on the back of that, we are seeing brokerages are also being a little bearish now. We are seeing brokerages like Investec have cut their target price, so definitely a negative impact is what we are expected in the stock price today. And as of now, bad set of numbers from Axis Bank for quarter one.
Thanks so much for that, Gaurav. So not a great set coming in from Axis Bank. The ADR yesterday was also down and out in trade today, yesterday. But let's take a look at Wipro. The company has met muted estimates in the first quarter. Revenue contracted 2% on a constant currency basis. Margins also contracted sequentially, but more or less in line with what the street was anticipating. My colleague Reema Tendulkar is here with more details. Reema, how were the numbers?
Thanks so much for that. So as you rightly pointed out, Q1 was in line with muted expectations. But I'm going to see I see some silver linings. For starters, Q2 guidance suggests to an improvement versus Q1, and the deal bookings are very, very strong, up on an average 50% on a sequential basis. But let's get to the numbers first. Now, constant currency revenue growth has declined by 2% quarter on quarter. This is within the company's own guidance. They had guided for -1.5% to -3.5%. So within the guidance, margins have come in at 17.3%. But the Q2 guidance, next quarter's guidance, is at -1% to +1%, which means that if the company achieves the middle point of its guidance, that 0%, it would be an improvement. Even if things deteriorate and the company does, at the lower end of its guidance, -1%, that's still an improvement compared to -2% that they've done in Q1. That said, Q2 is typically a seasonally stronger quarter for Wipro, so generally things do improve for the company. So just to quickly, some more numbers, this -2% would mark the second consecutive quarter of a revenue decline, and we've seen revenue declines across all the large cap peers. So whether it's TCS with a -3.3% decline or an HCL Tech with a -0.8%. So basically large cap IT companies have reported a revenue drop this time, and it's no different for Wipro. The deal wins have been particularly very, very strong. So the total deal bookings have come in at $4.9 billion, which is an uptick of 24% quarter on quarter, 50% on a year-on-year basis. The company's also signed 16 large deals, which includes 2 mega deals. And if you just look at the pure large deal wins, that is up 50%. So Q1 weak, but Q2 points to an improvement versus Q1. Sequentially, it should be better in Q2, and the deal bookings are very strong. Other numbers like attrition is ticking up very marginally, headcount is down by a bit, but I think the deal bookings and the quarterly guidance would be the key parameters, the KPIs to track for Wipro.
Well, thanks so much for that, Reema. In fact, don't forget to tune in to our chat with the management of Wipro at 8:35 a.m. today. Well, let's now put the focus on key earnings expected today. Reliance Industries is set to report its June quarter numbers. The company is expected to see a 16% growth in profit while margin may expand. My colleague Sonal brings us the details. Sonal?
Well, a good quarter is expected from Reliance Industries this time around. Remember, the stock is already up 21% this year so far. In terms of revenues, expecting a decline of 8% on a sequential basis. That is because raw material prices have come down, but EBITDA will see good growth, 3% in terms of absolute number. But in terms of margins, it will be a 200 basis points increase to come in at 18.7%. Profits also expected to go higher by 16% on a quarter-on-quarter basis. What will drive growth for Reliance this time around? It will be the O2C, digital and retail business which will drive growth. However, it will be offset by some weakness that we'll see in the oil and gas business. For O2C specifically, it's a 19% YOY increase expected in EBITDA this time, 3% on a sequential basis, which will partly be offset by refinery shutdowns that the company took. For Jio, the ARPU is expected to increase by 1% on a sequential basis. And for the retail business, the expansion will be on the back of JioMart scale-up, operating leverage and increasing footfalls as well. So watching out for these numbers, expecting to be a good quarter where EBITDA will be at a 5-quarter high this time around, continuously seeing an improvement.
It's a good quarter expected from Reliance Industries. Thanks so much for that, Sonal. But let's slip into a very short break. Up next, we get you cues from the commodities market, so stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. Let me take you through what happened in the US market. Wall Street ended Thursday's trading session higher. The Dow added 230 points while the S&P 500 rose to a new closing record after gaining a little more than 0.5%. The tech-heavy index, the Nasdaq, added 155 points at close. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes in Thursday trading on the strength of corporate earnings and new economic data. The Dow was up 230 points. The S&P, which closed at a record high, gained 34 points. And the tech-heavy Nasdaq, which also hit a new record, added 154 points. Retail sales rebounded more than expected in June, but experts say the increase could be due to tariff-driven price hikes rather than an increase in volume. According to the Commerce Department Thursday, sales rose by 0.6% last month. Economists expected to see the measure only increase by 0.1%. And shares in Lucid soaring in Thursday trading after Uber announced a partnership with the electric vehicle maker, where at least 20,000 Lucid vehicles will be deployed as robotaxis over the next 6 years. Under the agreement, Uber will invest $300 million in Lucid and will use driverless technology from startup Nuro. Nuro is backed by Google and the SoftBank Vision Fund. That's what's happening here in the U.S. Back to you in Mumbai.
Well, thanks so much for that, Pippa. But staying with the news from the United States, the Federal Reserve Chair Jerome Powell responded to criticism regarding the central bank's $2.5 billion renovation. In a letter to White House Budget Chief Russ Vought, Powell said, "We take seriously the responsibility to be good stewards of public resources as we fulfill the duties given to U.S. by Congress on behalf of the American people." On that note, let's listen in to Ellen Zner of Morgan Stanley with Wealth Management explaining why Powell would not back down on his own.
I think that Powell, in his DNA, he is a civil servant. And so he is not going to leave the Fed unless there is a clear directive and clear legal way to remove him from the Fed. And, you know, if you believe in U.S. exceptionalism, if you think a stable dollar is important, and if you believe that fully functioning financial markets is ideal, then join me in supporting central bank independence, because that is what you lose if you take away independence from the central bank.
Well, let's also listen in to more views coming in on the Federal Reserve's independence.
The latest from the White House was that they're not likely to pursue that path. I think most market participants appreciate that there are decades of research and a lot of historical experience showing the importance of central bank independence for achieving good economic outcomes, especially low and stable inflation. There's always probably a bit of a political push to go easier on monetary policy. If you give that to every politician, you're going to wind up with an inflation problem. I think both theory and experience bear that out. Economists all over the world have embraced that logic, and that's why the shift towards central bank independence has been a global one, not just one in the U.S. So I think markets would worry about that a lot if it did seem under threat, but I'm not that worried about it after what we heard yesterday.
This is about whether this institutional arrangement we've had in this country is going to continue. There's no law that says the Fed is protected in this way. We don't even know how a court would rule. So this is about the administration trying to put more pressure on the Fed and really win not in a court of law, but in a court of public opinion. And buildings are salient. I mean, it's something I think it's breaking through. Everybody understands it. I get text messages saying, is the Fed really doing this? How did this happen? But, you know, so this is really about just a maximum pressure campaign. Maybe it gives them a pretext to try to remove him if that's something the president wants to do. Obviously, what the president's doing here is putting the next Fed chair in a very difficult position, right? They're going to have to prove to the market that they're not what everybody thinks they are. But you still have 11 other people who are going to vote on monetary policy.
Well, moving on then, my colleague Manisha Gupta is joining us with all the updates from the world of commodities. Manisha, good morning. What are you watching out for?
Thank you for that, Vama. Well, I'm looking at the crude oil prices, which have gained yet again. We saw 1.5% of a surge come in for the crude oil prices. Remember, we've been talking about tight supplies and improved demand outlook, but what also seems to be supporting is the drone attacks in Iraq, Kurdistan, for a fourth straight day, and now this has led to output cut by 150,000 barrels per day. So there are supply concerns emerging yet again in the Middle East supporting prices. The ongoing Israel attacks in Syria is something that the street will watch out for as well. And in any case, because we are looking at stronger U.S. economic data, better than expected China GDP numbers. That in turn also has supported crude oil prices and many of these metals as well. Interestingly, silver also has seen support come back. It's trading back above $38 an ounce. Platinum is trading at near 14-year highs right now. We've seen copper prices gain in the overnight market. Rubber is trading at a one-month high. So a lot of commodities actually doing quite well on the last day of the week.
Well, thanks so much for that comprehensive roundup, Manisha. But moving on, the US House passed landmark cryptocurrency bills delivering on the Trump administration's embrace of the once controversial industry. US lawmakers easily passed the Clarity Act, which establishes a clearer regulatory framework for cryptocurrencies and other digital assets. House legislators also passed the Genius Act, which codifies the use of stablecoins. Well, that's all we have on this edition of Power Breakfast. Don't go anywhere. Pasar Morning Call comes up next.